Good afternoon. So we have here Matthieu Giz. Got that right. Giza, yes. Matthieu Giza will be talking us through designing the self-custodial bank of the future. And Matthieu is the co-founder of Skyline Digital. Thank you, Matthieu. Welcome.
Thanks a lot for the intro. Well, thanks a lot, everybody, for being here and actually listening to me. That's awesome. We'll have some interactive aspect of this workshop, since it's a workshop. So do you all have an internet connection? All right, perfect. So I'll give you a little bit of a spiel at the beginning, but then we'll go and have fun together, okay? So self-custodial banking, what does that mean? Banking so far has really been about custodying assets, right? Because when you go to a bank, the first thing you do is you put money in the bank. That's their business, that's why they're there. Now, of course, with Web3, you don't have to do that anymore, and banks don't like it. That's why we believe also that banks don't actually like banking crypto companies. And if you are a crypto company, which I believe that most of you are, you've felt the pain. And the pain is real not only if you don't have a bank account and can't pay your bills in fiat, but also if you have a bank account and every time you move money through exchanges back to your bank account, you get flagged. And why? Because for banks, these are high-risk transactions for which they don't have the transaction monitoring tool, and they have no incentive to actually set up the compliance that they would need to set up. Why? Because blockchain companies don't like custodying their assets with banks. You know, rightly so, because you can custody yourself. So hence why we've built a non-custodial bank. Now, of course, Web3, what we believe is a bit of a test market, right? We're not so big. We're all working in this market together. But I mean, if you look at where the real volumes are, real businesses, it's outside. And hopefully, we're going to see these type of numbers in the future. So empowering decentralization. And right now, what we're realizing is that a lot of people are okay with being paid in stable coins, potentially even non-stables. But really what's happening is that if you really want to be decentralized, you need to be able to continue acting in the same way that you're acting on a day-to-day basis as a decentralized organization. You need to be able to have full treasury control and don't delegate custody to somebody else. You need to be able to have transparency on an on-chain level about your financial your assets, and you need to be able to do batch payments, right? Because you don't want to have to do one payment per collaborator. You want to be able to automate these transactions, and you don't want to have one person that needs to validate each transaction each time. You are probably still setting up quite costly legal structures in view of having legal wrappers and maybe to be able to have a real life link to the to the traditional economy. But this is not really necessary. Often a lot of crypto companies are actually not living the actual corporate structure that they're using to use as a wrapper, and of course you want to be able to use Safe as a multi-sig to validate transactions. But before we start completely, let's do a little warm-up because it's going to be interactive, right? So, and I know, I'm sorry, it's not going to be recorded, but it's maybe not that bad if the warm-up is not recorded. So before we start, you're going to have to choose 1, 2, or 3. So 1, 2, or 3. Who wants 1? All right, 1. You want 3? All right. So it's going to be 1. All right. So fizz buzz, how to work. Every time, so we're going to count to, we're going to just count 1, 2, 3, 4, 5. But it's going to be 1, 2, fizz, 4, buzz. That means every number that is divisible by 3 is a fizz. Every number that is divisible by 5 is buzz. All right? 1. No, 6 is fizz. Yeah, but fizz. 13, but it's okay. 13, 14. Good. Yeah, you should have fizzed. 20, 21 is good one. 22, 23. All right, and we've got it's a buzz, baby. All right. And in the back there. All right. And we're good. We're all warmed up. That's awesome. So join me on Slido. And we're going to find out what is really important to you, because I had a bit of a, I had a hunch. I thought I knew what you like, but what is it that you really need as a crypto company? All right, I'll give you one more minute. Here we go. Have you ever slide? Yeah, you got it. Who doesn't have it? Okay. Fizz, 2, 1, go. All right. Now answer those questions. Whoopla, this is the first one? That's right. All right. So, what's your organization's most pressing need? You got 3 choices. All right, interesting. So we're going to have this go for a while. I mean, at the end, we believe that it's really, that to a certain degree, what banks did in the past are going to, are things that crypto companies are going to need also in the present. And so, we're looking at it. Okay, well, there's certain replication that needs to be done, but is it really exactly the same? All right, getting a lot of on and off ramps, invoice management. All right, we've got 2 participants ranking, 3. All right. So let's look at the results. First one, on and off ramp. So an on and off ramp, the way that we define it, is really you hold your own bank account and you have your own wallet. And so you come from your wallet to your own bank account, your bank account to your wallet. Is that what you all understand under on and off ramp? Yeah? So this is the most pressing need that you have. How come? Who voted for that? I mean, some people must have. Who voted for that? Yeah? You over there? Do we have a mic? Where's the mic? Here. Perfect. Go. Mike. Yep. Go for it.
Hello, 1, 2.
Yeah.
Yeah, for me the main issue is the off-ramp, basically.
Say again?
The main issue for me is off-ramp.
Off-ramp?
Yeah, we often have issues with banks and stuff like that. They just don't take the money.
So that means you already have a bank account and you're off-ramping to that bank account, but you're having issues on the compliance side at the bank that you're off-ramping to.
Exactly. Right. I have to justify everything 10 times.
Yeah. Okay. Anybody else off-ramp? Yeah. Go for it.
So actually in Safe, we want to attract more users and kind of like streamline the treasury from like tokens to dollars and stuff like this. So that can be cool.
Yeah. Okay. So that means that you would be holding on your own account again both sides.
Yes, exactly.
So it's really a question of treasury management. Yeah. Got it. Yeah. Go ahead. Somebody else? I saw a hand up there. Go for it. Yeah. I'll give it to you as well. Don't worry. You're next. We're going from the back to the front.
Yeah, basically, for 2 years operating, I still don't have a bank account for the company. It's in Singapore. It wasn't needed, but really need like a bank account to pay the bills that cannot pay with crypto.
Yeah, exactly. So it's really payments. So it's not really. I think one thing that we're struggling with to a certain degree when we're talking to our clients is exactly that. What is the difference between an on and off ramp and a payment? And at one point, does it make sense to off-ramp to a bank account when you could actually directly pay, right? And the reason why we have good relationships with the banks that we work with is because we're bringing flow, right? We're bringing a volume to those banks, and we're working with transaction banks, and so that means they're having an interesting partner to work with rather than having a lot of different small partners that just want to fund their accounts, doing an off-ramp and then pay and not really keep any money with those accounts. I know you had another, same one? Okay, cool. Cards. So I mean, cards is pretty obvious. Now, from a card perspective, what is it that you're mainly needing to, or what is your main use of those cards? Go for it. Yeah.
So I think mine is first on and off ramping cards. So from the Nigerian market, most of the companies in the Nigerian market have the same problem. So on and off ramp, because no bank wants to open a bank account for the companies, and the users already use this platform. So the users have to solve on-ramping themselves most of the time, and cards has become a way to off-ramp that the users are solving for. So now, is there a way to solve this problem for the companies themselves? Because it's more of a regulatory issue. The companies can't open bank accounts. The users can't use the traditional bank account method to on-ramp and off-ramp.
I see. Interesting. So yeah, I mean, this is also what we're seeing in the South American markets, where the banking networks are very complicated to work with, and it's a very fragmented system between the different countries, also in terms of currencies. So for us, it's a difficult market to work in because we'd have to be connected to all of these different players. So we're working to have these type of relationships, also, for the African market. But it's a huge market, right? And it's very fragmented. When in Nigeria, of course, you have a very interesting market, and we're very interested in that as well, and to be able to handle rand as well for South Africa. But yeah, so basically what we're seeing is that it's really at the user level that then there's the off-ramping that happens, because they manage to have these type of B2C type of card solutions. But of course, if they can get money on their account and don't have to do that, it's better. Go ahead.
It's been a lot of issues with the fees that get involved with working with these cards, especially if you use them as primary payment tools. 3% is a lot, 2% is a lot, 1% is a lot compared to traditional finance. If you're dealing with corporate purchases, you're dealing with events, you're dealing with advertisements, all of these payments that you casually need to do on the internet, subscriptions, they all happen through credit cards. And if you have a 1 to 3% surcharge on that very easily scales to a lot of money that is kind of just going to a middleman, which is the problem I believe we're trying to solve with crypto. At the same time, it's also from not only an organizational perspective, but also for people to use it. If cards would be more easier to obtain and use, it becomes more of a bank account rather than crypto is only signature transactions.
Yeah, I understand. I mean, right now, cards is just a mean of transactions, right? I mean, at the end, we hope with crypto to be able to then just kind of resolve that problem. I mean, why do we need cards if you can just scan a QR code or use the same technology that cards today use with the contactless payments and just have a crypto transaction happen right away? I think Gnosis Pay is a really good example of how to have now an intermediary solution where we nevertheless keep the custody of the funds with the user, but you're still able to work with the traditional card system. And then yeah, let's go to invoice management quickly. Anybody wants to talk about invoice management, particular troubles that you're having there? Otherwise, I'll just continue and we'll skip that one for now. All right. Good. So we're really seeing that it's payment, lending, privacy, cards, and investments that are the different aspects of self-custodial banking that we're trying to solve. So payments we talked about. Lending is something that, of course, traditional banks are doing a lot. Crypto companies are not having access to the type of lending that you'd have in traditional bank. Privacy is mainly for crypto-to-crypto transactions, because that's one of the big backdrops or drawbacks rather of crypto-to-crypto transactions, which a lot of companies face as well as investors, is that you can just trace what your coworker has been paid, right? By just tracing the transaction. If you do a batch transaction, you can trace what your coworker's been paid, and that's a problem on an organizational level. If you're an investor and want to invest in an NFT, the person that looks at your NFT is able to trace all the way back to your account as well. And so there is a need for privacy on a very open system like the Ethereum blockchain. Now, cards we talked about. Investments was interesting that you talked about the safe treasury because, of course, traditional assets are important as part of a treasury of a crypto company. We're looking, we know that a lot of the crypto companies, for example, don't have access to T-bills. T-bills being probably one of the safest investments in USD, and so it's a problem, right? When you have to rely on the yield that you only get from DeFi, which mainly is leverage on trading, which is actually quite a risky type of lending. So let's talk about these different aspects. So payments. What do you value most in payments? So let's go back to Slido here. Boom. And second poll. Go for it. I think so. Wait a second. Sorry. Going to second poll. Here we go. What do you value most in payments? All right, I'm going to give you a little bit of time to poll this. All right. Anybody need more time? There's still 7 participants ranking. So, I mean, the way that we designed or thought about what it is to be a self-custodial bank is to think of it like that, right? We've already had a lot of payment gateways. So merchant applications where you're able to accept credit cards or accept crypto, and that doesn't really solve the problem for anybody. It just allows people to accept some payments in either or the other. You also have a lot of on and off ramps that already exist, and so what we realize is, okay, well, where can we really solve a problem is by finding a solution where you do not need to hold a bank account. You can just have your wallet, and your wallet becomes your way into traditional finance. So low cost, of course. Of course, it's low cost. No, we're seeing that. We're seeing it, and we've actually dropped our fee to a third of what it was at the beginning of the year. We're seeing that there's a big, there's a competition on fees that is happening right now. We're not the only ones, and we're aware of the fees. What is the fee that you think is right for the capacity to be in your safe wallet with your stable coins and be able to pay in pretty much any world currency out there? What would be the right fee? Go for it. 0, okay.
I think it very much depends if you take a set fee a month or a time period, or you take a percentage-wise.
What do you think would be better?
It all depends on how much volume you do. If you do a couple of millions a month, you don't want to pay a percentage and are very happy with maybe even 1,000 a month subscription, while if you do 2,000, 3,000 to 5,000 euro a month, you're not going to pay 1,000 euro for a subscription. Yeah.
Thank you. Anybody else on the cost? Go for it. Oh, sorry. Yeah.
Not higher than Uniswap fee.
Not higher than Uniswap fee. Interesting. Yeah. Go for it.
From the transactional side, with what Visa and MasterCard would charge, I would imagine 2 to 3 times what their fee would be fair, because there's obviously a cost in meeting these regulatory barriers that have caused the problem of this off-ramping that we all suffer. So that's the kind of number I'd be thinking, but I don't actually know exactly what that would be. You probably do.
Go for it.
But like maybe your cost structure, because like do you have to build up like all your know your transaction, have all the APIs to banks, like because it is expensive. Like at the end, maybe the bank account is 0 for you. You see, they even charge you. So like at the end, it's not 0. Like it can never be 0 because it is a service. If not, you will build it yourself, like through an aggregator of bank APIs.
Yeah, if you're not paying anything, you're the product, right? So at some point, that's also the choice that we made, is that yes, we're doing it at a very low fee that is still profitable for us, and we are a business that runs on making revenue as well. We're covering 50%. We're not a profit yet. But we also made a conscious choice to lower the fees because we saw that there's a competition to the downside, so might as well just go for it. But yeah, I think Visa and MasterCards, they're charging the merchants, right? They're charging at the place of receipt, and they're charging up to 3%, right? So so we're not charging that. Yeah, exactly. So no, we're not. But we know that in the past we had similar providers that were charging 7% on transactions. We're not charging that either. We charge 1% per transaction. 1%. So it's 1% for the payments. If you're doing just off-ramping, depends on the volume, and then it's as low as 0.25 on a higher volume. But then of course that's discussable. Yeah. Yeah, exactly. I think it's okay, but that was an interesting discussion because I think there's really comparison that you want to make that we're making to what is happening today in fiat, and it makes a lot of sense. Speed of transaction. Yep. It all depends on the network, right? So we have, as we have in blockchain, we've got networks on the traditional finance side. SEPA is really fast. Swift is really slow. And then I don't know what are you guys using in Africa? Actually, I don't even know.
So for us again, a bunch of all this, but it's country by country. So in Nigeria, for payments, we have something called NIBS, which is actually one of the fastest in the world.
Yeah.
Probably faster than India's UPI.
Yeah.
Yes. It's like, so everyone's connected to it. It's very fast. Like even now, we can actually run it. I can send money to his bank account in less than 3 seconds. Like now. So like that's what we use for payments. But that's one of the good things. So we are proud of that one. Well, in terms of problems for crypto for us, like low costs, we won't talk about that one for now. Speed of fiat transactions, really. Then it's really for the payments and the range of currencies, because it's still the same thing, whether it's within Africa or like outside of Africa. It's the whole range of payments. First of all, on the country side, probably between me and someone in Ghana, for example, there is the trading pair between those currencies is already very illiquid. Yeah. So now my option to send a payment to someone in Ghana is probably using crypto, and that's still a problem.
Yeah. Interesting.
But in Nigeria, they charge you a lot of fees, like for transactions, NIMS, a bit.
It's a flat fee, and it's very low
because like in
compared.
all emerging economies, banking fees are just insane.
If I had to convert it to cents, it's currently less than 10 cents
per transaction, regardless of the
no
amount.
matter the volume. There are some very high volume transactions where it's now less than 50 cents the fee. So the maximum you can be charged for a transaction via the payment gateway is maximum you can possibly be charged is probably $10. Maximum you can ever probably charge for a single transaction.
All right. Thanks a lot. We're going to talk about Nigeria later. So now we're moving over. Privacy. So privacy, we talked about it before. A lot of people tried it. A lot of people got burned. You probably all have your wallets tainted, after having used a little bit of mixing, huh? But there is a silver lining, because privacy is coming back. So how much is it worth? So get out your app. We're gonna do some more interactive stuff. Now privacy, I'm Swiss, right? So I think privacy is one of our core rights as a human being, and having no privacy on blockchain transactions, I think, is really problematic. And especially if you're looking at scaling the peer-to-peer transactions on blockchain transactions, especially for teams or for investments, etc. I think privacy is really, really a problem, and it cannot be that everybody can look into them. So we've still got 2 participants ranking. Anybody that hasn't ranked yet that wanted to? Scream if you do. No? Okay. All right. 0.2 to 0.5%. Right. So it's so you'll be willing to nearly pay more for privacy than for fiat payments. That's an interesting. So privacy is worth more to you than to be able to pay in fiat. Is that correct? Am I making an assumption that's correct or not? All right. Who's yes? Who is it worth more than fiat payments? All right. Is it worth less than fiat payments? All right. We have a mic here. Why do you think that it's worth less than fiat payments?
Well, I think it's one of those situations where if you need to, we all live in this fiat currency world, right? So to be able to pay any kind of invoices or any of your vendors, you need to be able to have access to the fiat system. I think privacy doesn't really solve that. So that's why I would say fiat, the fees for fiat should be higher.
Got it. So that privacy doesn't solve as much of a burden that you're right now facing. And you were on the yes side, right? All right, let's hear for yes.
For me, it's depending on the use case. For example, for DAOs and on-chain organization, it is really important to have like the payment privacy aspect to pay the contributors or the team. So that's
yeah. All right, sounds good. All right. Well, we think privacy has a lot of value, but we actually agree on this classification. So I think there's a match made in heaven. Here we go. So let's talk about self-custodial lending. So here we have a couple of ideas. Or the way that we aim to roll out these features and on OTC basis first and see where there's traction and then implement them inside the software. Of course, we're in a bear market, so funding is also not the easiest thing to get across these days. Factoring, token-backed loans, founder loans, NFT collateralized loans, direct fiat payouts. So, for example, you'd be able to hold an asset and then directly have those payouts be done in fiat. Of those, is there something that is particularly exciting for one of you? Yeah, go for it. We have a mic. Mic.
Particularly token-backed, because it does not only open doors for Web2 or external, funds and resources being linked to the crypto network or blockchain network, but just as much also opens the door for TradFi already existing infrastructure to exist on blockchain as well, like mortgages, for example.
Yep.
Being able to, Propi is already doing that.
So maybe just explaining what I mean by token-backed. For example, you'd have a treasury of Gnosis tokens, right? And these Gnosis tokens somehow, they're not liquid. You can't sell them on the market. But you nevertheless would like to use that as liquidity towards being able to use towards your team. You'd get that as a collateral for a loan. And then, of course, you're paying interest rates on that, and then you need to pay back the loan in whatever currency you took it out in. That's a token-backed loan.
How do you convince a bank to give you a loan on
Say
digital
again?
assets? Like you as a provider, how
Yeah.
did you convince your banks to,
Oh,
or
we're
you
not doing it
offered the
ourselves.
loans? Okay.
We're not doing it ourselves. There's a lot of players that already do it. For example, GSR. There are a lot of players that.
Where in the EU?
No, they're out of they're out of Hong Kong. So yeah, it's a challenge. But this is the way that we're aiming to launch these features. Is we're not going to be able to do it ourselves. It's that's the beauty of blockchain, is that it is modular, right? So we're able to bring in other providers to provide these products for us. Of course, there will be a certain kickback aspect that we'll get as an introducer, but it's very transparent.
I think it has to be like you have enough money to be able to provide the loans yourself.
No, we would not be able to handle that out of our balance sheet directly. No, definitely not.
But I think that's in Europe is the only way that a bank is not going to give you a credit on Gnosis tokens.
No, definitely not.
Definitely.
No. This would be private, larger crypto ecosystem players that already have larger liquidity, potentially other crypto treasuries that might want to provide a loan depending on the terms, etc. So that's definitely not us. I'm gonna move because we already talked about cards. Oh, maybe we can talk about cards quickly. So you said you're paying to actually use your cards. What is it that excites you particularly for cards? Is it expense management? Like Revolut, where you're able to, every time you make a purchase, you directly put your expense on it? Is it getting miles or potentially even token rewards from different projects that you can get? Is it cash back that you're looking for? Is it lounge accesses or access to cool to cool different events or private clubs? Is it the look and feel of the card? Does it have to be a metal card that you're looking at? I don't know. I mean, I'm just asking, right? Or is it about really the price and the fees? Or is that really what you're looking for is to be as lean as possible? All right, we're going to have time for one comment. Anybody wants to comment on this? All right, the front row's active. Let's go. Wait a second. The mic is coming. Otherwise, it's not going into the recording.
Yeah, I'll say something that probably fits into price and fees, but something that's kind of like similar to Monzo or Revolut, where they have very aggressive and kind of good forex fees.
Yeah.
So yeah, probably that.
Yeah. Anybody have a different opinion?
I use a crypto.com card, and I really like the launch access. Like literally, it's so
Yeah.
nice.
All right.
And then you also get token rewards, so like you actually get money.
Yep.
Which is something that non-European credit card will offer you. Like there's no little air miles and no reward. Like only Amazon was doing that, and they're like taking back their cards. So it's actually cool.
All right, we got somebody in the back because we got to switch it around. Yeah, I've got time up, so we got one more and that's over.
Hi. Yeah, just one quick question about the card. Isn't that a tax nightmare in Europe? If you have a real card that actually sells crypto every single time I use it, it's always a tax event, isn't it?
It depends if you're a business or if you're an individual. So as an individual, yes, indeed, it will every time be a taxable event. If you are a business, then anyways, every transaction that you're doing is a taxable event, so it doesn't really matter.
But I mean, it matters if, like, I mean, it depends on really, I mean, ultimately card is just another off-ramp, right? So, but if I start buying, I don't know, I have an office, I buy the coffers for the office with that card. It's like smaller transactions means more events, more tax
I mean,
paid.
but that's why expense management is so important. And so you need to be able to just download this whole thing with the expenses associated to it and then put it up into your Xero.
Because that's kind of what I kind of see the biggest problem with the card is, right? I mean, maybe I have like 1,000 ETH in my treasury and I want to use it to pay for all my expenses.
Got it.
But if it's unmanageable, because then I have to kind of deliver a boatload of transactions to a tax advisor.
Yeah. Well, the way that we don't have cards yet, right? So just we're still working on it. But I think for us, what we realize is it's extremely important to be extremely efficient in the reporting and directly being able to be linked to. We're really business focused, right? So we're looking at ERP systems. What can we integrate with? Can we integrate into Cryptio, into Bitwave, etc., so that it just makes everything much easier. And so that's why we're thinking expense management with cards would be super important. Just last questions, and it's not so here. By the way, you can. Here, if you want to open an account, just scan this. This is my Telegram. I gotta go because I'm being shooed off the stage. But it's been a pleasure. Thank you so much.